All right, let's bring in our next guest. He uses a proprietary model to identify investing opportunities. He is beating his benchmark this year. Degas Wright is the Chief Investment Officer of Decatur Capital Management. He joins us today. Welcome to the show. It's nice to welcome you to our program.
Thank you, Scott, for having me on the show, and I'm looking forward to being part of it.
Yeah, as we are as well. I hope you heard some of the conversation we were having. I know you're a good stock picker, but I'd like to get sort of your broad thought, if I could, first on where you think we are with a lot of cross currents to consider.
Yeah, so what we look at is that our proprietary models looks at about 4 different factors. Quality, we look at profitability, expectations, price, and then also social license to operate. What we're seeing in this particular market is that it's been a move away from those companies that have high profitability, and actually the value companies have been doing well. But a day like today, with a strong pull down, we're seeing that those companies with good profitability are doing well.
Do you foresee these mega cap growth stocks continuing the run the way they have, or are you starting to look for some of the laggards, some of the more value names, even those, you know, the epicenter, if you will, stocks that we just talked to Tom Lee about? Because I see a lot of exposure in your book to these big mega cap techs.
Exactly. But we have to look at them individually. For instance, let's take Apple, for instance. If we start looking at what we call our PEPs, profitability, Apple is actually at about a 90% or a top decile company when you start looking at their return on assets. Very strong for profitability. As we get into the expectation, if you look at Apple, Apple is still beating expectations in earnings and also sales. And also they're getting surprises on the positive side relative to earnings and sales. So then we break down and look at price. Believe it or not, even at this price for Apple, we're still seeing it as a top decile valuation, and we're saying that this has more to run. If we look at the social license to operate, Apple is doing a good job. One of the things Apple has really focused on recently is their supplier requirements. And so they've actually let go some of their mineral suppliers that were not meeting their requirements. So from a social license to operate, Apple's doing the right thing. So Apple is an example of a company that's doing very well and will continue to run in our estimation.
I want to ask you about a few other picks that you have, but I do want to get, since you do own Facebook, what is your reaction to this new and developing story of these big companies like Verizon and now during our program Unilever saying they're pulling back their advertising dollars?
We're actually underweighted Facebook in our portfolio. We have exposure to Facebook, but we are underweighted. And the primary reason that we're underweighted is that the price, and when we start looking at PIPs, the price is not where we would like to see a company that we continue to invest in at market or higher. Also, the social license to operate for Facebook has been really damaged with the whole data privacy issue. And so we're seeing that as another reason to underweight Facebook, and we're seeing that Facebook is actually underperforming significantly today.
Yeah, well, that's for certain. We're looking at it down 8 1/3%, reacting to the news and some of the commentary around it. In terms of the stocks you like from a large cap standpoint, I have in front of me Paychex, Cintas, and Viva Systems.
Yes. So let's first take Paychex, because Paychex is a story about if you believe the economy will eventually recover, Paychex is a great story. Ultimately, we're looking at top decile for profitability, where Paychex is right now. We're also seeing that their estimates for future earnings and earnings and revenue have come down. However, they're still beating Wall Street expectations on both earnings and sales. So that's something that we think is very positive. If you look at the P in that PIPs, we're seeing that Paychex is actually top decile for valuation. So as the economy recovers, we're going to see Paychex recover. Also, as we look at the social license to operate, Paychex is doing a great job. We actually check on using news to actually monitor that requirement every day, and Paychex is doing a great job. So that's one of the stocks that we hold. Also, Cintas is doing well. Cintas is obviously the supplier of uniforms and cleaning supplies. It is, again, top quarter for profitability. We're also seeing that estimates are coming down, but they're still surprising on the up end as it relates to earnings and sales. We also like the price of Cintas. So once again, the P there is very good for us. Also, as it relates to their social license to operate, they're doing well. I
have to hit the next one next time, Degas. We're out of time. It's nice to welcome you to our program. We'll see you soon, I'm sure.
Great. Thank you.
All right. This is Degas Wright joining us today.